Hi everyone, hope you're all doing well, and today we're going to do a video on Lordstown Motors, and the stock is currently, well, it finished down 16%, and at one point it was actually down a little bit further than this. And yeah, basically, if you don't know, a short report has come out about Lordstown Motors, and I thought, hey, I've had a few people asking in the Discord, I've had a few of you guys asking in the comments, can I cover this and what my thoughts are currently on this short report, and we'll go through it. Now, I'm going to say I've actually recorded this video once already, but the video ended up being like 25 minutes, and I was like, I think you guys are going to get pretty bored of me talking about this for like 25 minutes, so I'll try and shrink it down to a bit more of a 10-minute video, so sorry about that, I just kind of got carried away. But yeah, I will try to keep as much of a neutral point of view on this as much as I can, and just let you know as well, I'm probably going to do a video on Dropbox a little bit later as well. But yeah, we'll get stuck into Lordstown Motors. So Lordstown Motors, you can see here, it dropped 16%. Now, when the stock actually opened up, it was a little bit lower than 16%, but it did try and put a little bit of a recovery in. So there's clearly some people that were buying on the dip after this drop because of the short report. Now, I am going to say this about short reports. Short reports are always, there's always quite often points exaggerated, and there's also points that are pretty much made up to try and help them. And the thing as well with a lot of short reports, you've always got to go through the reports, and normally it's on the first sentence or the first paragraph, and it's like we have initiated a short position, or we are short on this company. And you've always got to remember, like, quite often a lot of these short companies have financial gain to make from putting these reports out. They're not doing it for the good of the retail investors to be like, oh, you probably want to move away from this company. They are trying to make money on these short reports. So you've always got to be careful of that, because quite often there'll be points exaggerated and points made up to try and help their case. And yeah, it's always something to kind of remember. But just kind of off topic though, the guys that brought out the short report are the Hindenburg research. Now, actually, funny enough, these guys were the same company that brought out the Nikola short report, and we saw what happened there. I don't know if this was probably like one of the hottest topics on YouTube for a good kind of few months, and basically it came out that this video here in 2018, you'd think this is a normal hydrogen semi-truck working, driving around. Turned out this was actually pushed down a hill. Yeah, and I mean, credit to them. If short report never came out, we probably would have never known this was actually a truck being pushed down a hill. So they have had previous success, I guess, with the short reports, but at the same time, there has been other short reports where they have been wrong, and you've always got to take that into consideration. They're not exactly a straight shot all the time. So sometimes they are wrong with some of their reports, and yeah, I thought I'd make that very clear. It's always good to kind of get a history of how the company does, and like I said, this company isn't always 100% correct, so always take that into consideration as well. So this is the short report on Lordstown Motors that is on the Hindenburg research website, and basically the big thing they're trying to go with is that they exaggerate. Well, first of all, they say that there's no revenue with this company, but that's not an exact crime. You could be a public company with no revenue. Questionable whether or not you do invest into a company with no revenue, but there's definitely no crime in that, so that's nothing to be worried about. The big thing they kind of go for is they point to the book of 100,000 pre-orders, and they kind of say that they exaggerate this and make it seem like these orders are more secure than what they actually are, and also that they use these orders to attract investors and to raise capital. So yeah, that's kind of the main thing they go on about. Quite often in this report, you'll see that they go and say that some of their clients aren't legit clients, which you can see this one here with E2. There's also this one here, which is a 2-person startup. Now, this is something that I see quite often with short reports. They always blame like the people ordering them, and sure, there might be some incorrect errors in here, but it's just something that I see so often. It's normally something I dismiss quite straight away, because they always seem to exaggerate these or not tell the full story, or quite often they'll say something about an address, but they'll generally get this address from a random place, and not even the proper address on the website. So this sort of thing I generally never take serious. One thing that he does go on about is saying about Steve Burns, and there's a lot of bashing on Steve Burns. Now, my personal opinion with Steve Burns is I don't like him as a management. I actually used to have a small position in Lordstown, and I'm at the moment, I'm trying to stay neutral. I'm definitely not bearish on the company, but I'm definitely not bullish on the company. I am as neutral as you could be on this company. But the reason why I did move down from being a bullish person on this company to a neutral person on this company was because of the management team. Management for me is make or break on an investment, and if I don't trust the management team, I can't have my money there. Now this report does have a lot of bashing at Steve Burns, and they do use a lot of like former employees to do this, but generally like there'll be a lot of former employees there that might have been sacked and would be willing to say these sort of things, and they could generally get someone that was like, oh, I worked for Workhorse for one day, and or Lordstown should say, and stuff like that. And yeah, there's a lot of bashing here, but even though I'm not a big fan of Steve Burns, I do think that some of the bashing here is, I wouldn't take it as being legit. That's the thing. So yeah, I'm going to say that there. There's a lot of history here about Steve Burns and Workhorse, but yeah, same again. You can't really hold that against being a new company at Lordstown. Sure, you might say it might make him not a great manager, but it's definitely not something that is the SEC would look into, if you know what I mean. So yeah. And that's pretty much where they're going. They're going about another fire that happened with a prototype. Once again, that's nothing the SEC would look into. Sure, it's not great that a prototype set on fire, but you know, it's nothing that the SEC would look into, and it's a prototype. You know, sometimes some of these things will tend to happen every so often. So, like I said, this is one of the main things that they do try and focus on. Now, this is where I think this is the worst part of the report, and it depends how you want to take it. But basically, there's actually a Yahoo Finance article here which has an interview with Steve Burns, and basically on this report he goes on to say we have pre-sold, when actually it's a terminology point of view. You know, if he's exaggerating pre-orders that are not, you know, the term pre-sold kind of suggests that they are confirmed sold orders where the payment has been made, which would be the worrying part, because realistically these are pre-orders, and what the report gets onto later on is that these are non-binding orders where there's zero deposit. So that could be kind of seen as exaggerating what the current contracts are, and that's probably the biggest red flag here, and that's what probably the SEC would look into. It depends how serious they want to get on that terminology. Like I say, it's probably not the correct term to be using, especially when we look at what is said later on. But yeah, that's probably the big thing that this report is on. I think a lot of other things in this report are exaggerated points or made up points. So yeah, this is definitely the headache that they would have. To be actually using pre-sold as a term probably wasn't the best. So yeah, it goes on about letter of intent rather than being pre-sold. There's a little bit further down here. Once again, we get some Steve Burns bashing. You know, I'm not a fan of the guy, but yeah, there's nothing that the SEC can't look into someone because they think they're an idiot. You know, so that's unfortunately Hindenburg do not have any grounds there to look into that. So here it does go on to say about the GM plant. So basically, one of the good things that it does have is that Lordstown actually do have a plant that GM bought. But yeah, basically they were saying that it's a bit more to do with like political gain, because at the time it was in Ohio, and yeah, basically the presidential election was going on, and they used that into the favour and got like, I remember this being on CNBC where they had an interview outside the White House with the Lordstown Endurance, but they're saying that basically, you know, it was good for at the time the president to kind of like, we're creating this many jobs and stuff like this. But it's weird one GM, because they did have an investment in nickel, we've seen how that worked out. But yeah, I think having a plant off GM is a bullish case for Lordstown, but I do kind of also see the point here. But you know, who could blame him? You know, I don't. Once again, I don't think this would hold up in an SEC investigation or anything like that. Now, this is where we get onto the proper stuff, which is where we look at the non-binding orders. And once again, we see the quote where it says, we see pre-sold Yahoo Finance. And there's one here with Jim Cramer saying they're very serious orders. And it goes on to say that these are non-binding letter of intent, require $0 as reservation payments, which is worrying. Like, sure, I mean, Tesla do this quite often. They'll say they've got so many pre-orders, but their pre-orders are like, I can't remember what they exactly do. I think Tesla pre-orders are like $500, but at least that's a bit more of a meaningful deposit. Like a zero reservation payment is, yeah, I don't know about that. And yeah, to be having non-binding letters of intent and then using them as pre-sold is definitely not great. Do not require an actual purchase. Yeah, I mean, that's non-binding letters of intent. That is going to happen. And yeah, this is apparently one of the orders. I mean, we don't know if this is a legit order. So, you know, we don't know if this has been made up, because apparently this is a copy from a former employee, which does make me a little bit nervous. So yeah, but we can see here, non-binding letter of intent, no reservation or payment, non-binding commitment that does not require payments of any kind. And this is weird. This here, possible press release. I think that to have a non-binding letter of intent with no payment, but to have a press release is very weird. That does make me a little bit nervous. Like I said, we don't know how legit that is, but to be doing press releases on a non-binding letter of intent and no reservation payment is a little bit weird. And this is what kind of going like it's more to show off to investors and boost confidence and raise capital. Yeah, it is weird. That is something that one does worry me a little bit. So yeah, there is that there. This is the part where they go on to say about a lot of the people that have ordered these trucks are just like not correct and like a bit of a sham companies. But I see this all the time used with short reports, and yeah, I'm not a huge fan of this. But yeah, you can always look through the short report yourself and have a quick read of it. But yeah, I'm not always a huge fan of a lot of what they use for these short reports for them sort of cases. They have a little bit here where it goes on about the prototype bursting into fire in January 2021, but once again, won't get them into too much trouble. It's a prototype, you know, sometimes things go wrong. Maybe not great for the company, but definitely not something that the SEC would, you know, look into for sure. They say the production target would not be met. Once again, nothing the SEC would look into. You know, you could question whether or not it is going to be met or not. I mean, this is a pickup truck they have been working on quite a few years. But once again, I would not worry about this too much. Sure, you kind of worry as an investor, kind of, you're like, are they actually going to meet the targets? But it's nothing that would get them into massive trouble. So yeah. There's also something about the insiders offloading shares, which there has been some offloading shares, which isn't great, but nothing kind of crazy. I mean, I think Steve Burns, I don't believe, has offloaded loads of shares, but that's kind of the report overall. And my overall opinion is that there is the classic things in here of the short report, the shorters exaggerating points and maybe even making points up. There is one or two things in here that does make me a little bit nervous. I do think that, like, the point of view of that, the non-binding orders, the terminology they used in that. The SEC could potentially look into that. You know, if the non-binding orders with zero deposits and you're classing them as pre-sold, probably not the best terminology to make. We'll see what the SEC do make of that. In general, you know, there is a lot of swipes at Steve Burns. Personally, I'm not a fan of Steve Burns, and this is he's the reason why I turned from being very bullish on the company not so long ago to a bit more of a neutral point of view. Is that I don't think that. I think he has done a few strange things, and I like I say, I think management is a make or break thing in an investment. And sure, you can be in the wrong place at the wrong time once, but when you're in it twice, I am always like, okay, this is kind of suspicious. Like, say, he does have not an amazing pass. He has a bit of a checkered pass at Workhorse, and you guys know me, I'm not a big fan of Workhorse. And also now to be doing a few similar stunts at kind of Lordstown, which isn't amazing. And you know, the kind of, when you look at it and you're seeing things in non-binding contracts about press releases, the media push he's doing. I think as well he's previously done a few questionable interviews I've seen as well, where I'm like, you know, fair enough, you do an interview with the president outside the White House, like, that's amazing PR, don't get me wrong, you know, of course you can do that. But there's been a few interviews that I'm sure you're aware of, where I'm like, okay, why is a $1 billion company that is probably at peak kind of ramp up production doing that interview rather than focusing on the company? And a few of them have been on YouTube itself. I'm always like, that's not absolutely amazing. And yeah, that's when my opinion kind of changed the management, because I was like, okay, we should be really focusing on the company rather than some of these other things. And it does seem like they do really like doing a couple of press releases, which is not great, but I mean, how far is that going to hold up with the SEC? So yeah, overall, I don't think it's not the most damning short report I've seen, and I think, like a classic short report, there's a few exaggerated points in here. At the same time, there is one or two little things that I'm like, okay, that's not the best thing to be going on with the company anyway. So yeah, overall, my opinion is that I won't be buying this company, because I do think there's some suspicious things going on with this. But at the same time, I'm not incredibly bearish with this company, and I do hope it works out for Lordstown, and everything goes well. And I know that a few people are investing into this one. So yeah, I don't think it was the worst short report I've ever seen, but there's some few red flags, and it still kind of gets to the point of view is like, previously to this short report, I was like, I'm not a massive fan of the management team. And once again, you know, there's a few red flags, you know, being in the wrong place at the wrong time. Once again, I'm like, okay, it's not great. So from my point of view, like, I won't buy this one, because, like I say, I think you do require a solid management team. And I think when they end up being in the wrong place at the wrong time multiple times now, it's just very suspicious to me. So I won't be buying this one, and I definitely wouldn't, in my opinion, recommend this one as a buy at the moment. So but yeah, overall, I don't think it's the worst thing for Lordstown, but it's definitely not great for them anyway, with what was already going on with the company anyway. But yeah, I hope you enjoyed it anyway. Tried to keep it as much as a neutral opinion as I could. If you could, smash the like button if you made it all the way to the end as well. Let me know if you are going to buy some Lordstown shares on the drop as well. Always interested to know. And thanks for watching, and I'll see you in the next video.